Hi, everybody, and welcome back. We have Thomas Perfumo joining us today, Head of Business Operations and Strategy at Kraken. Thomas, thanks so much for your time today. Really appreciate you being here.
Thanks for the invitation.
Maybe the best place to start is always maybe you giving us a little bit on your background, your role at Kraken, and then you could just slide into a kind of an overview, brief overview of the company.
Sure. I'll kind of take in the opposite direction there, but
okay, fair enough.
Typically, one of the oldest and largest cryptocurrency exchanges. We service over 7 million clients in over 190 different locations, and we offer over 70 different cryptocurrencies tradable across 7 fiat currencies. So very much a global company. One of probably the biggest, oldest remote first companies actually as well. Something that really differentiates us in our culture. We operate several different businesses. We started as a spot cryptocurrency exchange, just the simple kind of buy sell, whether it's Bitcoin, Ether, or any other kind of digital asset, with additional services including staking operated under that business. We also have a licensed derivatives platform in Europe that we call Kraken Futures. We have an OTC desk, one of the biggest and most established in the industry. We have a platform called CryptoWatch, which is charting and data analytics, which are commonly used by traders, but also some institutions who want to do multiple exchange kind of executions, almost like an OEMS platform. We also have a platform called CF Benchmarks, an index business, one of the leading providers of indices for cryptocurrency price feeds. We do that across even groups like the CME, for example, and their futures, but also for the DeFi space itself as a price oracle. So a lot of interesting intersection there. And then lastly, we also have the SPDI, which is a new frontier business for us, which is basically a banking charter that we're going to be operating here in the US. And we provide all of this over mobile applications, multiple of them actually. I've been working with Kraken for over 4 years, and so I currently oversee the global strategy and business operations teams, and I also oversee our branded research group, which we call Kraken Intelligence. Prior to Kraken, I worked for More Capital as a long-short analyst covering special situation equities in a generalist capacity, and that's my short career so far.
Terrific. Maybe you could talk about that's a large, interesting suite of products, obviously. Maybe you could talk about Kraken's offerings in Europe or other jurisdictions versus the US, and sort of which products are where, and what are the challenges with sort of navigating rolling out products in multiple jurisdictions?
Yeah, so as I mentioned, we operate globally over 190 different locations. Specific to products and services, you're exactly right that there is a lot of fragmentation here. We do prioritize product and service parity globally. What's interesting about the cryptocurrency industry is twofold. One, it's increasingly intersecting the financial services industry. And so with that comes a whole host of regulation. And so we do have to take into account a lot of regional licensing and compliance requirements, whether that be here in the US or even Japan, for example. What makes our industry particularly interesting as a second point here is that it's extremely easy to roll out crypto services because the infrastructure is naturally global and just rides the internet. And so you have this almost like an opposite effect to traditional financial services, where instead of starting regionally and then expanding slowly thereafter, we're starting globally and then narrowing and tailoring our products and services based on the requirements in those local geographies. And so in terms of what we offer and how it's different across geographies, it would be a good example is like our regulated derivatives platform in Europe. We only offer it in Europe and rest of the world. We don't offer it here in the US. We might also offer limited capabilities in Japan, for example, where we only have a handful of assets that we offer, and we don't offer things like staking, for example. So of those businesses that I listed before, probably 8 or 9, I would say in any given geography, it might be limited to as much as 1 or 2 of them. And in others, it could be the full suite. It really depends on the regional requirements and the regulation down there.
I see. And you mentioned staking. Briefly describe, just to kind of level set, what staking is, and then talk about Kraken's offering when it comes to staking.
Sure. So staking isn't an emerging concept. It's actually been around with us for a few years, but the size of it has grown pretty tremendously over the last year or two, particularly as asset values have grown. So what is staking? Staking is a form of consensus building, and it's used to verify transactions on certain protocols like Cardano, Polkadot, and in the near future, hopefully Ethereum. And the difference between staking and proof of work, which you've probably heard as mining, is that with mining and on protocols like Bitcoin, you have to purchase equipment that's specifically catered to mine that cryptocurrency. With proof of stake, you can commit your tokens themselves for a chance to mine the block and earn rewards. And so it's a very different kind of model in terms of how you build consensus. In some ways, it's more efficient. A lot of people like to look at it as sort of the green way of validating a network from a consensus standpoint. And how do we participate in staking? We do it by offering clients the ability to stake via our platform. And so one of the problems with staking, broadly speaking, is that it's a highly technical issue, if you will, in terms of trying to provide a validator. You actually have to host the software, typically on a server, to be able to handle redundancy measures or issues around outages, because you have to be present when you're validating the network, or you might be subject to what's called slashing risks or penalties, effectively, if you may have a different copy of the network, and even though you believe that that is the correct copy. And so we handle a lot of that minutia, and we handle a lot of that risk for our clients. And then secondly, in many staking networks, like Ethereum, for example, you actually have to stake a minimum amount in order to participate. And so with Ethereum, that's 32 Ether. It's about $70,000, so not pocket change for a lot of people. So we make it more democratic ourselves by allowing our clients to stake as little as $1 and providing more consistent rewards, because with larger balances, we're more consistently likely to win the opportunity to mine a block and earn those rewards. In terms of uptake, hundreds of thousands of clients do this, and we've seen millions of people starting to participate only in the last year, just broadly speaking.
Do you think the Ethereum 2.0 and the move to proof of work more broadly for Ethereum will catalyze even more people to get involved in staking?
Yeah, I think so. I mean, in terms of market sizing, right now, staking on the protocols themselves is total market value opportunity of like the tens of billions. Ether catapults that into the hundreds of billions. And so even today, I believe only about 1% to 2% of all Ethereum supply, circulating supply, is staked. So there's still actually a lot of runway even prior to Ethereum 2.0. So people are still getting familiar with it and still committing. The issue with Ethereum right now is, and that signal, if you will, of that 1% to 2%, is very simply put that when you stake right now, your funds are going to be locked until the network launches, which is supposed to happen in the next year or two. And so I suspect that right around that launch is when you're going to see that big jump in terms of the number of people who are committing to that, only because you'll have that flexibility of having your Ether staked, but also being able to use it, quickly thereafter by unstaking it whenever you'd like. And so I do think that that's going to be a huge opportunity for everyone to really get involved in staking in a meaningful way.
I wanted to ask you to talk about kind of the cross-sell opportunity. You mentioned so many interesting products, but you also mentioned sort of a geographical overlay that maybe makes it so they're not all available at the same place. But where you do have multiple offerings, is there a kind of a graduation strategy, or are you seeing consumers sort of, dip their toes in and then over time, or consumers or institutional users dip their toes in and then over time, graduate to other products? How does that look for you guys?
Yeah, it's super interesting because, with crypto being so multifaceted between a commodity for utility, but also what's commonly seen as an investment product, you have a lot of different use cases that people come to the platform with. And so you'll have people who might originally come to Kraken because they want to buy a stable coin like DAI, for example, so they can participate in DeFi. And you might have other people who come on the platform because they want to buy Doge or kind of invest in a specific cryptocurrency that they can't get elsewhere. And so the reason I bring that up is because you have so many different behavioral reasons for people to just onboard. And obviously that naturally results in many different kind of client journeys. And this is also different, of course, in every single geography. But in many cases, you might see clients who come on board just because they want to buy Bitcoin, Ether. They do it because their friends tell them. And, to what we were talking about earlier, this concept of jumping down the rabbit hole, once you do it, it's an opportunity for people to really start learning about cryptocurrency, and then they might go off into off-chain or on-chain services like working with DeFi and trying things out like NFTs, and that actually brings them even more deeper into some of our other products and services like staking, for example, or parachain auctions on Polkadot, and we use that as an opportunity again to try to create the most broad ecosystem of client journeys that people can come no matter what they're doing or where they're from.
Yeah, that's an interesting part about your guys' model, that it really is not an exchange, which I think in most people's minds, maybe that's the first word that pops into their head, but really an on-ramp and an intro to a broader kind of universe of opportunities, which I think we're going to get into a little bit of that in just a second. But I wanted to ask first about the competitive environment for businesses like yours. What differentiates you guys? Why do consumers and/or institutions come to you for these services rather than your competitors?
Yeah, and I'll actually run off of what you just said in answering this question. The reason why I think people conflate, what we do with being an exchange, and that's, basically what we've been called, and also our peers, is really simply because it's just a matching service, a marketplace for people to buy and sell crypto and to exchange in different kind of currencies. Because, back in the shortly after Bitcoin was launched, the only way to get cryptocurrency was to mine it. And so the exchange was simply the first way to onboard. And so in some ways, and I don't think it's a great name, it would almost be, we like to call ourselves and our peer group, our direct peer group, crypto fiat gateways. And so it's basically the gateway for people to transition from the traditional financial services industry into our industry. And so from a competitive standpoint, we do try to compare ourselves with other players who try to serve that role. And the important thing from a competitive standpoint is that it's extremely nascent, the industry itself. We're at the very kind of bleeding edge of what we think is going to be like a financial and technological revolution here. And so when it comes to competition, we do think that the pie has a lot of room to grow in general. In terms of scale, maybe in the hundreds of millions of people have ever touched crypto. Obviously, with access to billions of people on the internet, that can meaningfully grow over time. I think I'll split the competition in two parts: crypto native platforms and then other fintechs who have sort of branched into crypto. With the latter, it's a little bit easier because a lot of these folks and firms are providing very basic services like buy, sell crypto, and mostly from an investment standpoint, but they don't have the same kind of talent and capabilities in terms of providing people more advanced functionality like staking, simply because it's much more difficult to do. And I would say that is becoming like table stakes and very basic from the exchange landscape, if you will. With the crypto native platforms, what's super interesting is that we're seeing this constant convergence of fintech, traditional banking services, and these crypto platforms. And so for us and our direct peers, we actually have a lot of interesting nuanced strategies in terms of how we're going to participate in that convergence. And so we really see it as trying to provide an ecosystem of different products and services so that we can more quickly accelerate that transition of millions or billions of people coming onto cryptocurrency or crypto industry itself. And as a quick example, we've 4x'd our signups during the first quarter versus the entire half of 2020. And so we're seeing this constant acceleration, this constant conversion. We want to participate in that direction. And I think there's a room for a ton of different differentiation and approaches here. And so we're just going to keep innovating along crypto as a crypto native platform.
Interesting. And so it's early days, and we're far from a winner takes all type of situation. There's a lot of differentiation that's possible in a broad market opportunity.
That's correct. And I would also mention that reputation in this industry is also extremely important. It's also being recognized, I think, more broadly from people who are either just joining or even the institutional crowd as they do their research. I mentioned this from like a risk perspective, where we've seen dozens of platforms over years come under security incidences, lose cryptocurrency as a result. Even just having basic things like very good support on a 24/7 basis in sort of a one-on-one high touch experience, also very important. Those are things that we invest a ton of time and resources into. And so that is also becoming for us, a namesake in terms of how we are reflected in the crypto industry itself.
That's a great segue to a question I wanted to ask you about sort of your risk management model, your security. How do you keep balances safe? What is the methodology that you guys deploy?
Yeah, sure. So for us, when we think about risk, and particularly around custody itself, people like to think that we invest in security because it's like nice branding and stuff like that. For us, it's really a business continuity risk. And so that's exactly how we think about it, exactly how we treat it. We think security is it's the number one priority for Kraken, whether we launch a new service or whether we're just operating status quo. It's built into our DNA. When you're onboarding, for example, you go through entire training exercise. And I don't mean just like, use your computer for only work-related matters, but I'm talking like at a personal level, like go change all your passwords, make sure you're using a password manager, make sure you're using certain 2FA devices for everything you do in your personal life. And so these are things, again, that's embedded in how we operate. In terms of, our security around custody, it's pretty simple for us. Service and privacy are at the heart of what we do. And so we want to offer that kind of flexible, seamless experience, easy deposit withdrawals and whatnot. So what that means for us in terms of how we structure our model, it's pretty much the vast majority of assets are held in offline secure storage. These are air-gapped, isolated computers away from any kind of online or unsecure networks. We have a dedicated team of cybersecurity experts who produce, they actually produce a lot of industry research themselves for the crypto industry, and broadly speaking, they've even done things like exploit hardware wallet vulnerabilities and responsibly disclose that to improve security in the industry. So we do have this kind of reputation for investing a lot of dollars in, but also promoting education in the industry around security. For institutions specifically, we might offer a range of custom security solutions that are tailored to their specific needs. We don't disclose that just for the privacy of the clients and for their benefit. But we also, I would say, philosophically, we do encourage clients to take their own risk tolerance into consideration, not just limit themselves to the risk tolerance of the risk management of the platform, which you would expect from almost any other kind of traditional financial services firm. Because if I deposit balances with them, or I might invest in a security, for example, there isn't anything I can really do. But with crypto, you actually have the option of pulling your funds and self-custodying it, self-storage. And so the only thing we recommend there is for people to do their research, get familiar with their own personal risk management and tolerance, and from there make a decision on whether they want to custody the funds with us or what they want to take it for themselves and deal with their own security.
You'd mentioned a banking charter that you guys are pursuing. Tell us about that decision, the rationale for it, what that lets you do.
Sure. Yeah. So the banking charter is called the Wyoming SPDI, or Special Purpose Depository Institution. We were one of two players to receive this license, and we were the first exchange certainly to do so. We actually participated in the legislation itself, which was like a special moment, and I think reflective of how we try to operate in terms of working progressively with regulatory bodies and legislators to try to achieve innovative, I wouldn't say sandboxes, but really regulated and licensed environments for us to bring that kind of disruption in a responsible manner. What the SPDI allows us to do is basically act as a depository institution or provide banking services, but in a special purpose manner. And so what that really means is we actually operate in a 100% fully reserved basis. So what's cool about it is it really forces the business model to be quite differentiated from what you think of a traditional banking player. And so in that case, you obviously have that familiarity of I deposit funds into a savings account. I might earn a little bit of a sliver of an interest rate, but that used to not be the case. But in exchange, they would basically do a deposit transformation. They would take my savings, create credit off of it, earn an interest rate, and that's how they funded their operation. And the utility of that money is almost secondary, like being able to take your paycheck and being able to spend it on bill pay. For us, it's flipped, right? Because we don't have that same kind of credit business behind the scenes. we actually consider our business model to be almost 100% around the utility of your money, whether that's from an investment standpoint or onboarding into the crypto industry to use it in whatever fashion you'd like. But we think that, for us, it's really about providing that seamless bridge between the traditional financial services industry and ours. And that might mean as simple as your personal paycheck coming to us, which will now be possible. We'll be able to offer other different kind of banking products and services and advertise them. And we think that we're going to be a first mover here in terms of rethinking how people consume financial services today, at least starting here in the US, and hopefully we'll bring it abroad as the licensing allows us to do so.
And what about the institutional side of your business? How is that evolving? And what do you really see in terms of the adoption trends in institutional? I know the word institutional can mean different things to different people, but what do you think about from on that side of your business?
Sure. So, we've been servicing institutions for quite some time here. I would say the first sort of institutional operators were really the trading firms who were focused on creating a marketplace for all these millions of people who want to buy and sell cryptocurrency. And so they provide liquidity, for example. We also see other institutions like brokers, for example. They might be even more regional, where they use us as a liquidity platform. And then, of course, other institutions, family offices, investors, things like that, who want to use our platform also for liquidity purposes. In terms of the needs of institutions and how we service them, it has to do with a lot of things that those institutional clients are already familiar with. And for example, one of our primary touch points, if you will, is access to around the clock dedicated institutional manager or account manager. And so we also offer a lot of different products and services targeted to these clients, including our licensed crypto derivatives platform in Europe, including our OTC desk, which really handles, again, that high touch experience for several institutions, as well as high net worth individuals and family offices. And we also, again, have that kind of one-on-one support, which is another basic service that people are used to. Lastly, we provide robust access to APIs. These are actually APIs that are easy enough for individuals to get involved in, and they don't even need like engineering degrees. For example, I've created a bot. And so a lot of these institutions have the ability to onboard directly via API, and oftentimes they can do it in under a week and without any guidance. But we might also provide them access to certain members of our product management or engineering groups so that they can guide these clients through the process of onboarding with our APIs. And so that's really the approach we've taken in terms of how we service institutions. It's only going to grow from here.
And so you see institutional adoption just in general as something that is an accelerating trend?
Yeah, I think so. I think one of the interesting things that really unleashed a lot of the stories that we've been reading over the last year has been this narrative shift in cryptocurrency itself. And so when I joined back in 2017, well, firstly, there was in my mind like a 50-50 risk that this industry would just blow up and disappear. And I think a lot of it had to do with this negative reputation around it being a completely unregulated environment, facilitated and used by criminals. And so you had this kind of mob money mentality. A year ago, and obviously, we've been building towards trying to create a more positive reputation around the industry and sort of the disruption and innovation that we think is going to take place over time. But really over the last year is when you started seeing a lot of the institutional crowd on the investment side start to adopt that narrative of Bitcoin in particular as an inflation hedge. And all of a sudden you add this whole air of legitimacy to it. And then from there, you have this kind of like herd coming in, whether it's the traditional financial services industry or fintechs who are just jumping on board, learning about different protocols, providing access to their own customers. And so we've seen a lot of this first early adopter in terms of the institutions themselves taking place. Even names like specifically like Fidelity Digital Assets is looking to almost double their headcount, for example, as of today. And so what do we think is going to continue this path of acceleration in terms of institutions? We think about three things here in terms of main drivers: less regulatory uncertainty. We have a lot more clarity than we did 3 or 4 years ago, but there's a ton of room to grow here. It's very difficult for us to deal with the accusations of being an unregulated industry when there literally is no license for us to get. And so we're really hoping that over time, we'll see additional legislation for us to be able to work in a progressive manner towards this direction of innovation. And we've seen a lot of other countries who've taken the flag on this early on, and that includes countries like Japan, for example, that quickly created a regime for us to be able to work with. And that creates a lot of certainty for local players to get involved with us. Another big driver for institutions is going to be just general demographic adoption. So younger demographics being very used to a native digital environment and appreciating value of digital assets. I think that's going to force a lot of institutions who service those people as customers or clients. It's really going to force them to provide offerings that cater to those individuals. And so that's going to be more meaningful, as that number of people involved in crypto grows from the hundreds of millions into the billions. We do our part there by providing additional research and resources to these individuals. We have a whole platform that we call Kraken Intelligence. You can look it up on kraken.com/subscribe/intelligence. And we basically are helping to accelerate the adoption from that demographic. And then lastly, use cases worldwide adoption. This isn't really one sector anymore. It's a collection of disparate protocols and subsectors with different use cases. And this leads to a lot of what I think anyways, opportunity for disruption and innovation just by testing and competition within the different protocols. So as more use cases develop, you're going to have more reasons for people to utilize cryptocurrencies, more reasons for institutions to either look at crypto as a facilitator perhaps of their business or as a requirement for customers who may want access to those different use cases. And then also the investment crowd, of course, themselves, because in a lot of cases, these are commodities. And so it'll, in a lot of ways be the next oil, if you will.
Mm. And on those regulatory comments you made, and this is obviously just your personal view, do you think the regulators in key jurisdictions are going to be able to sort of thread that needle between, regulation that basically encourages institutional adoption rather than a heavy-handed smothering of innovation? That type of I think that's what the bears, I guess, would say they're afraid of. How do you think that shakes out? It's a crystal ball question, but how do you think it shakes out?
Yeah, my personal view here is very simply that, like, this conversation of will regulators be able to keep up and will it smother innovation or not? Two key points. One, that's like a conversation you have in every single industry, even like social media, for example, and other fintech services. So I think it's not a narrative specific to cryptocurrency. It's just something that gets, I think, a lot of attention with us specifically. Now, the second part on the regulatory environment is I think we're starting to see that, with the growth in the space, we're starting to get more people appreciate that this is an industry that really deserves attention from a regulatory front. And so my hope here again is that we're going to start seeing a greater efforts on the legislative side in particular. And so I do think that that's taking place, and that legislation is going to be super important because, again, it creates the ultimate form of clarity. Otherwise, we're basically we're going to spend all our time, as we are doing today, debating interpretation of 100-year-old laws. And that's just obviously very difficult when those laws never took into account this age of digital finance. And so we're going to be participating in that as well. I think generally speaking, when it comes to regulation, we also do a lot of almost like SRO or self-regulatory efforts here, where we think just naturally it's in the best interests for ourselves as a business to provide clients with that kind of high standard experience, because not only do we anticipate it's going to be necessary to service them as a basic requirement, but we think that they expect it from us. And so that's sort of been our posture to regulation. But yeah, I definitely think that it's starting to heat up, and we've been expecting this for years, and so we're ready to meet it.
We only have 2 or 3 minutes left, so I wanted to ask you an impossibly large question. How does Kraken look in a few years? I think it's very fascinating. You talked about, used the word gateway. I've used the word on-ramp. What is the longer term kind of product roadmap? What does Kraken look like as you fast forward out a handful of years?
Yeah, I think the simple way to describe it is like an ecosystem of crypto native products and services that are going to be seamlessly offered with what people are used to from their traditional financial services. And really the only reason we do that, again, is because we see that it's going to be a necessary requirement for us to facilitate that transition. Otherwise, we would just go straight to crypto and just focus on that all day. And so it's going to be that ecosystem. We want to own pretty much the entire client journey from, where they start consuming financial services to where they end up sticking around and growing their wealth or their requirements around financial services with us specifically. And so we expect that over time, we're going to be able to do this, whether that's integrations with DeFi, for example, or even from our standpoint as a strategic matter, purchasing or acquiring different companies that provide these kind of unique financial services that we think customers are going to demand. These are all things that we think are going to build into what I consider, or what I've seen as like an extremely broad roadmap with a very ambitious goal and mission for the company, which is financial freedom for everyone.
That is a lofty goal. That's fantastic. Well, Thomas, we're out of time here, but thanks so much for joining us. Super insightful comments. Greatly appreciate it.
Yeah, of course. Thanks for the invitation again, Ramsey.